Well, folks, it appears that we have the most perfect economy ever. It is starting to feel like Goldilocks has attended our economy. Lots of things going on today, a lot of economic numbers. The big one is the jobs numbers, got a lot of important earnings. We got stuff going on with super micro. There's just a lot to get through today. But probably the biggest conversation we will have today is the fact that I think I know why the 10-year note has gone up, and more importantly, mortgage rates have gone up. So we're going to talk about that today and more. Let me just make sure we note that. So let's get into it. Let's talk about the ADP report first. Again, we have three important jobs numbers this week. We got the JOLTS report, job openings, quits, things of that nature. Yesterday, it was disappointing. It was expected to be roughly 8 million. It came in closer to 7.5 million. The job openings to available workers was all the way down to 1.1. It had spiked to almost 2 during the pandemic. But let's talk about ADP this morning. Okay, ADP was estimate to be 113,000 jobs added. Last month, just for reference sakes, it was 159,000. So again, last month was here. Expectations were here. It actually came in significantly above. Jobs created in the private sector were actually 233,000. Yes, folks, 233,000. That is still with 2 hurricanes and the Boeing strike. Yes, I don't know. Can we believe these numbers? I am not one for conspiracies, but these are getting kind of interesting. Manufacturing was the only sector in our economy to show a negative number. All others, hospitality, healthcare, things of that nature, were up. The job growth was dominated by big companies. Roughly 150,000 of the 233 were companies over 500 employees. Yeah, big number. And manufacturing, if I didn't say, lost 19,000, but that's to be expected. There are 33,000 folks at Boeing on strike. So if we take the 33,000 out, it was actually a positive number as well. Frankly, folks, ADP report means very little. It will get all the headlines the next 48 hours, but the big number is Friday. Again, last time I checked, expectations were for 100,000. That would be significantly lower than past months. So again, it's all about Friday. So we will keep moving forward. How about GDP? This is why I call it I kind of joke that it's the most perfect economy ever. GDP actually came in for Q3 at 2.8%, not quite 2.9. So again, growth is there, but it is not hot. 2.8% growth rate historically would not be the reason to have inflation take off again. It should be noted that inside that 2.8% GDP was actually a very, very strong consumer. The consumers made up for 3.7% GDP growth in the quarter, which means other sectors were negative. Think private investment, think housing, things of that nature. So again, the economy in mass is doing well. But I still believe there's a lot more cracks in the system. We will see again on Friday. Mortgage applications were actually up. But again, remember, we're coming off a very, very low number. Mortgage applications for the week to purchase were up 5%. Refis were down 6%. Again, these are week-on-week numbers. If you want to have a comparison year-on-year, purchase apps were actually up 10%. Do you guys remember what mortgage rates were a year ago? 8%. You know when a 7% mortgage rate feels good? When it's not 8%. So yes, mortgage applications were up. So let's talk about why rates may have spiked. This is just a theory that I'm working on. I shared it yesterday with Anna Kelly. I'm sharing it with you now. I do not know if this holds water, but I wanted to share it with you. I want to get your feedback. I want you to tell me what you think in the comments below. So if we go back to the Fed rate cut, we all know that mortgage rates were 6.1. I think the 10-year was like 3.6, maybe 3.7. And obviously it's nowhere close to that this morning. In about 3 weeks, we've added about 100 basis points to the mortgage market. Why might that be? Now, I've heard a lot of things. You might be thinking a lot of things. Some of you are out there saying it's all election and election interference. Maybe. Some of you are saying that the next president-elect is being determined by the market, and they are going to spend a lot of money, and thus the bond market is revolting. Maybe. I actually want to postulate a third angle. And I feel pretty good about this, but again, you tell me. And again, these are all just possibilities. It could absolutely be one of the others. It could be a combination of all three, but let me give you the third. I actually believe what might be happening is the smart money, the bond market, is discounting a recession. Think about it. 3 weeks ago, right, the economy was, generally feeling that a recession was in the offing. Some people were calling a recession starting in Q4. I've made that, call. I've said maybe the consumer pulls back enough that the recession starts in Q4. So what I'm postulating, thinking is what has happened here in the last 3 weeks is the smart money has gone from, a recession is coming. We don't know when, but it's coming. And of course, if a recession is coming, they know what the Fed will do. They will lower rates. And the reason I say this is because you've got to remember the bond market is a forward-leading indicator. If you haven't learned by now, let me remind you, if the Fed cuts rates 50 basis points, the 10-year in mortgage market doesn't move. It's already priced in. So what I'm trying to highlight is maybe the smart money is saying, you know what? This no landing that Zuber has been talking about for 8 weeks, 12 weeks might actually happen. If we go into an environment where we have no landing, meaning the market just keeps, sputtering, humming along, whatever you want to call it, I think what the bond market is saying is, of course, higher for longer. I don't know, a month ago, 8 weeks ago, there was, expectation that the Fed might cut 250, 300 basis points. We are nowhere close to those expectations today. So maybe what the smart money is saying is the odds of a recession have gone down from, say, I'm going to make this up, 35% to 15% to 10%. So the bond market probably doesn't really care about the election. It's the amount of money in the bond market is too big. It might care about the debt and expectations for another $2 trillion in debt spending, maybe. I am starting to believe the smart money does think that no landing is not only possible, but given the violent move in rates, maybe the smart money is saying we avoid a recession is probable. I don't know. Let me know what you think below. I've been thinking about that for the last 3 or 4 days. Something is just not sat well with me as I was watching the bond market just rip. So you guys let me know what you think. We did get a lot of earnings. We got a lot of earnings yesterday and a couple this morning, more after hours. I'll just go through them. Reddit surprised with a 22% earnings beat, raised forecast. Alphabet, aka Google, beat top line, beat bottom line, frankly, beat across the board. One thing that's interesting about Google is they highlighted they will be using AI to streamline workflow and manage headcount. What does that mean? Well, it certainly means less hiring, and it could mean layoffs at Google. Chipotle, revenue miss, earnings beat, sales growth forecast disappoints. Have we got our fill of expensive burritos? Maybe. Are we trading down from Chipotle to McDonald's? Maybe. AMD matched forecast, but matched expectations, but had disappointing forecast. Again, are we seeing something break in the AI sector? We shall see. Snap beat top line, beat bottom line, but again gave weak guidance. Are you guys noticing a trend? There's a lot of weak guidance coming. Visa beat top line, bottom line. Actually had 12% revenue growth. We are swiping those credit cards. First Solar. Oh, this might be the ugliest report I've seen in a while. Missed top line, missed bottom line, significantly lowered guidance. Yes, folks, not adding those solar panels anymore. What else? DR Horton. Let's talk about DR Horton, one of the big builders who reported yesterday. Pretty ugly report, but DR Horton, in my opinion, again, if you remember what my desire is more entry-level housing. My desire is builders are incented to go smaller. Looks like DR Horton is listening. DR Horton is selling smaller and cheaper homes. They're basically saying that's the part of the inventory that's moving, right? There's definitely a movement from single-family disconnected to single-family connected, shared walls. Again, this is one way out of the housing crisis. It won't be fast. It won't be quick, but it is a way out. DR Horton lowered forecast, highlighted less lead time. Again, no bueno. And lot prices are increasing. Think about that, folks. They're having to sell smaller homes, but land is getting more expensive. Land is an input cost for builders. So we'll see where that goes. At the end of the day, the big note from DR Horton CEO was they believe that buyers believe that rates will be lower in 2025. Folks, if you've listened to my channel, you know that I think that might not happen. In fact, my gut opinion is it's not going to happen. We are going to have higher for longer. Let's shout out some school members. We got a bunch of people joining school yesterday. I want to shout out Jonah, Stephen, and Warren. And Warren joined and canceled. Yes, folks, you can join school for 1 month, cancel your subscription like Warren. But guess what? You still get 30 days to look at the 6-hour masterclass on creative financing. You can get to level 3 and get the 10-week boot camp. So you can join like Warren and quit the same day. That is okay with me. I'm here to help. I'm here to give value. If you only want to join for a month for 67 cents a day, no harm, no foul. Warren, hopefully you like what you get, and we'll see you back. But if not, totally okay. Again, Jonah and Stephen, thank you for joining as well. I got great news. A lot of you are fans of Dan Bird, our Sunday stock guy. You can now go to YouTube. He has a YouTube channel now. He posted his first video. It is simply at Breakpoint Trading. So just remove the net. Go to YouTube. Dan Bird, yesterday he had 2 subscribers. One of them is me. So again, Breakpoint Trading is finally live. He's been talking about doing a YouTube channel forever. It is now live. He's going to do daily scans. He's going to talk about all the things that he does in his portfolio. So again, right after this live is over, go check out Breakpoint Trading. All one word, Breakpoint Trading. Shout out Dan. Janet Yellen's out saying fraud is a huge and growing problem in the banking system. Excuse me. And they are deploying AI to find it. Interesting. I don't know if you saw this morning, but Supermicro's auditors have left the premises. Yes, Supermicro's auditors resigned after raising concerns months earlier. Folks, when your auditor leaves, let's just say that's not a good sign. Just between you and me, not a good sign. So again, Supermicro's auditor has left the building. We shall see what that means going forward. I suspect their stock is down pretty big this morning, would be my guess. Caterpillar, we did get Caterpillar's earnings this morning. They missed on the top line. They did beat on the bottom line. What Caterpillar highlighted was strong. Oh, I'm sorry. They missed top line and missed bottom line. I misspoke. Missed top line, missed bottom line. So miss again on both sides. They highlighted that for companies who sell overseas, a strong USD or US dollar is not good. Again, strong dollar for folks like Caterpillar who sell overseas is not good. What else do we got here? Yep. Again, buyers believe that rates will be cheaper in 2025. That's an interesting thought process because, again, that's just going to delay. At some point, potential buyers, if there are any, will realize maybe rates aren't coming down. Or if they do come down a little, we could see a wave of demand. It is going to be interesting. Lastly, a note from Morgan Stanley's CEO. Morgan Stanley CEO says the era of zero rates and zero inflation is over. To which I say, duh. Sometimes you can't make this stuff up. It's wild. Again, he highlights that the issue is with geopolitics are back and likely to be here for decades to come, which is not a warm and fuzzy feeling. Folks, that is your daily financial news. Don't forget to join school, like, subscribe, comment, and remember, if you are in school, in about 15 minutes, you're going to be able to go live with the three amigos. Yes, Matt, the Lumberjack Landlord, Dion Financial Freedom, and myself, Dion Talk Financial Freedom. Sorry, I misspoke. We will be going live. We will be taking your questions. And again, don't forget, if you want to join school just for a month to see what it's all about, no harm, no foul. Totally okay with me. Folks, take care of yourself. Later.